This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. What is up, Zinger Nation? Welcome back to another episode of Benzinga Live. Happy Tuesday, everybody. Feels like a Monday, though, after that long weekend. Of course, markets were closed yesterday for Juneteenth, but we're back now. The markets are back open, and almost wish they didn't, because everything is down today. The S&P 500 SPY's trading down about 0.8%. You look at the Qs. The Qs are also down about 0.7%. Tech actually coming back a little bit off the lows of the day, starting about an hour ago at 10:30 a.m. Eastern. So Qs, coming back a little bit after being down almost a full percent. Your Dow Industrial Average, that is down almost a full percent as energy and financials trade lower. Quick rundown for the show today. We've got some top headlines to talk about. I've got my man downtown, Nick Brown, hanging out backstage with me today. So in a few minutes, we're going to bring Nick on, tick through some of these top headlines. We will be talking about, we've got some China news. Of course, Alibaba stock is trading down about 4.5% today. That's one of my actually pretty big holdings. So I always, I'm watching Baba's price movement. So on a day like today, my portfolio certainly does not like that. We will be talking about Boeing as well and some new housing data. So a lot on the docket today. Let me go ahead and pull up my Benzinga Pro, and we'll just take a look at some of our charts before we bring Nick on. And yeah, let me know in the chat how everyone's weekend was. I mean, we had that long weekend that they. So, is it? Let me check something real quick actually before we get to Benzinga Pro. I think what they did was they added Juneteenth as a market holiday, but then Columbus Day is no. Am I wrong about that? Is Columbus Day still a market holiday? Let's look this up real quick. Let's fact check this. 2023 market holidays. All right, 2023. Yeah, so there's there's no Columbus Day. There's President's Day. You got MLK Day, January. You got President's Day, Good Friday, Memorial Day, Juneteenth, 4th of July, Labor Day, no Columbus Day. Because Columbus Day is in what? October? Yeah, October. It's like the second Monday in October or whatever. So, okay. So we didn't get an additional stock market, day of the market's closed. They just switched that one over. I like it more, though. I mean, because this is the summer. I mean, trading's already a little bit slower. There's usually a little bit less news and things to cover going on in this summer. I don't know why that is. For whatever reason, I guess people are just on vacation. A lot of people in Wall Street in New York go up to the Hamptons or wherever they are in upstate New York, Cape Cod, and they're there for the summer. So they're not, sending as many emails. They're not getting as many deals done. So I think having that extra day in the summer is not the worst thing. What's up, MD? Alrighty. Without further ado, let's go ahead and bring Nick Brown on, and we'll talk about some of the top headlines of the day. Oh, actually, hold on. We got to go to Benzinga Pro first. Sorry, Nick. I pump faked. Pump faked Mr. Brown there. All right, so S&P, your SPY is down 0.75%. We can look at it at the 2-minute chart here. You can see coming back up off the lows of the day a little bit here. I got down to around right below 435, back up above 436 right now. Go to the Qs real quick. Pretty much the same exact story with the Qs. Those look pretty much identical. Your Dow Industrial Average down a little bit more than the S&P and the Qs today, almost a full percent. You can see here XLF Financials getting kind of hit today, down 1.3%. And you also have XLE Energy down 3.8%. So XLF, excuse me, XLE getting absolutely hammered today. That's probably the biggest, move and everything that's going on. If you single out a lot of companies in the S&P 500 or in the Nasdaq, they're not having that terrible of a day. But you can see here just the big boy energy stocks getting kind of hit today. I don't know if there's. Let's see if there's some. Let's see if Nick knows if there's some specific news regarding that. Let's give Nick our very special Zinger Nation welcome. Bring Nick Brown on the show. Let's see what he's got to say. What is up, Mr. Brown? How you doing?
AB, what'd you say? I missed that. You cut off for the last part. You wanted to know if I had any info on
why energy stock. I think I might have found it, but energy stocks are getting hammered today. We were looking at XLE, ExxonMobil. Let me see. CVX is Chevron, all trading down today. Pretty so. Let's just go here to Benzinga Pro, Nick, and see. Looks like nothing specific. Go to Google. Not seeing anything. It's probably just a oil price. Yeah, oil falls on mixed Chinese demand picture. Yeah, so I mean, like the price of oil is so dependent on China's economic outlook. So anytime China puts something out that may not be great, you'll see the price of oil fall. And so obviously, like the oil and gas companies, Chevron, Exxon, all trading lower on this. It looks like.
All right, where do you want to start? Because I think you could attribute the Goldman downgrade to China GDP to the oil. Goldman downgraded 2023 GDP to 5.4% from 6%, 2024 to 4.5 from 4.6. This note came, I believe, Sunday evening. They were citing limited stimulus and weak sentiments, and Goldman joins another number of downgrades. UBS 5.2 to 5.7, B of A to 5.7 from 6.3, JP Morgan to 5.5 from 5.9, Numera 5.1 from 5.5, Standard Chartered 5.4 from 5.8, and it all resounds around GDP, limited stimulus, weak sentiment. So there is even some comments from the China Beige Book, China people, saying we had to downgrade our own GDP just because of the weak sentiment and everything. So it looks like it's going to be not only energy, but Goldman downgrade. And it's very interesting because we're in this market now. Market was up yesterday, S&P and Dow and the NASDAQ are all coming off their best weeks in a while. And now the market's lower today. Why? It could be because Fed's Powell speaks tomorrow on Capitol Hill, tomorrow and Thursday. We have a number of Fed speakers on the wire, and I think we actually have a few here in a few minutes, around 11:45, I believe. We have Michael Barr that's doing a Q&A. So there's a lot of Fed speakers, and now we're back in this market. Is good news good news? Is bad news good news? What does all this data and info mean for the general market?
Yeah, and I mean, like the China news, like you said, Nick. I mean, it's bringing pretty much oil down. All the Chinese names. I'll get a chart up here on Benzinga Pro of, take like Alibaba stock. But my thing with these GDP, it's like, okay, we're all gonna downgrade China's outlook based on the GDP, and then everything goes lower. Then all of a sudden, like the expectations are so low that then they start beating those expectations eventually down the road. Then everything goes higher. So it's very cyclical. I have to look into it to see exactly how bad the outlook is in China, what these economic problems are that people are worried about, and to see if it's something that, to me, because I am an investor in Alibaba and a few other names over there, if it's something to be worried about long term, or if it's just, okay, we'll be fine. I'm going to continue to hold, or maybe even take this as a buying opportunity. As you can see here, Alibaba's stock down almost 5% today. But, I think there doesn't always have to be an exact reason why. I mean, you look at the S&P down. We know why China names are down. We know why oil's down. But in terms of the overall market, I don't necessarily think it has to be because Powell, there has to be a specific reason. You look at this chart here, you can see, I mean, the S&P 500 has been on fire since March. For about 3 straight months, it's done nothing and gone up. The S&P 500 is up, or was up before today's price action, more than 15% year to date, which would put it on pace for one of the best years ever in market history. So it's not, I don't think, unheard of to see a little pullback, to see some people maybe taking some profits, to see a little selling action, and then, doesn't necessarily have to be any underlying cause.
Right. And that leads to the next point, because there's been a number of notes out on the street this morning, over this past week and weekend, that what's the market future going to look like? Credit Suisse thinks that they see a 70% chance of a recession in Q1 24. Morgan Stanley's Mike Wilson, bottom line, we believe equity markets are as stretched as they can get, with market participants wary of missing a potential new bull market. You have Oppenheimer's chief strategist John Stolfus, quote, "We remain constructive on equities based on improving fundamentals, even as uncertainties on the economic and political landscape remain to be addressed." Are we too bullish, or are we too bearish?
100%. It's hard to know right now. And I mean, like, I think a lot of people have been surprised by this rally over the past few months. I wouldn't say I was surprised at all, really, because I mean, if you think about, we're talking about these recession predictions and what percentage odds about us entering a recession this quarter, next year, whatever. If you go back, if you remember 8-9 months ago, everyone was talking about a recession not as a possibility, but as if it were a foregone conclusion that we were either already in a recession or that we were heading toward a recession. I mean, you look at, if you turned on CNBC, CNN, it didn't matter. Everyone was, and if I would have told someone, a market participant at that point, that, hey, in 8-9 months, inflation's going to go down, while unemployment goes down, and we're going to avoid a recession, you'd say, yeah, the market probably should be trading higher. So to me, it makes sense that, given the outlook and given how the economy has held up surprisingly well, through interest rate hikes, as well as, inflation falling a little bit, I think it checks out that the market's at where it's at, and probably could continue to go even higher. Just needs to kind of like take a breather, in my opinion.
Yeah, but it's very interesting, too, on a day that the market's down, we get a note. This was pointed out by Sam Rowe on Twitter from Capital Economics. They say, quote, "We now forecast the S&P 500 to fall to 4,000 by the end of this year." That's implying about a 10% below its current levels, but reach 5,000 and 6,500 by the end of 2024 and end of 25. So they think 4,000, we come back down to 4,000 this year. Next year, they see 5,000, and in 25, they see 6,500. Are recession fears just dissipating? Or are we just canceling recession out? Are we canceling all the political upheaval out? Are we just saying we're in a bull market, we're going to continue to be in a bull market, and we're not worrying about any eco factors? Powell got inflation under control, 2%. Unemployment's going to continue to be dropping at these low levels. Everybody's going to get jobs. Job market going to be in fantastic shape. Are they missing something that we're not?
Well, I mean, I think, like, you have economic conditions that have improved since those recession calls started to come out, right? Like, inflation has fallen. Unemployment's coming down. We had housing data today, right here on Benzinga's homepage. Housing starts skyrocket to highest level since 2016, sign of strong market optimism. So it's not even necessarily about just the stock market participants. It's just participants in general. People saying, yeah, I'll build a house right now. Things aren't as bad as we thought they were. And so, I think there's a lot of good going out in the economy right now. I think there are still some like, you have, interest rates that are still at their highest point since 2008, 2009. So you have a lot of companies that are dealing with this for the first time in their existence, high interest rates, and like maybe still have to feel the repercussions of that. So there are things. I'm not saying like, oh, everything's 10 out of 10, economy's firing on all cylinders, let's buy. I'm just saying there are, there are good signs out there, I think, for people that are going long right now.
Oh, yeah, but I mean, the housing data, Aaron, and I mean, that's a good lead. I mean, housing starts over month, 21.7% in May. They were calling for an estimate of negative 0.1%. Housing starts 1.631 million. Estimate was for 1.4 million. Building permits 1.491 million. Estimate was for like 1.425 million. And then building permits for May 5.2%. Estimate was for 0.6%. I mean, this data, are we in a housing market bottom? And within the last half hour, Goldman raises Q2 GDP by 0.1 to 1.8 after the strong housing data. Bank of America says the data increased, but after you round, they left their Q1 and Q2 GDP unchanged at 1.8 for Q1 and 1.3 for Q2. But I mean, the data today for the housing market really goes to show that people are still buying houses, they're still building. Did we have a bottom, or are we on this uptrend where inflation is low, permits are coming back? I mean, I don't know what to make of the 1 month data. This data, are we supposed to just not look too far into it, or are we supposed to just put it on the side saying we're going to keep an eye on it?
Yeah, I mean, with the I think with the current interest rates and where you have like mortgage rates are at the highest, so I think there will be some sort of demand drop at some level, just because of the cost of borrowing right now. So when you see the supply increase, like if people are building a bunch of houses right now and you see the supply increase while the demand might be kind of, I'm not going to say going down necessarily because of the high mortgage rates, but kind of like plateauing maybe, but supply increases, that could start bringing housing prices down, which I think, a lot of people have been looking for years and years and years. And so, people might welcome that.
Yes. And I mean, JP Morgan, too, to add over the list over the weekend, just because it's the weekend, these notes from the banks don't stop. It's very interesting. JP Morgan's take, they think, quote, if growth stalls in absolute terms and cyclical rotation does not get a fundamental support, then the overall market could come under pressure in the second half. And you could use that against today's bull and bear debate every day today, why the market's lower. Maybe it could be off this JP Morgan note. I don't know because, you have to take breathers every once in a while. The market just can't go up 2-3% every day. You have to take some breathers. You have to sell eventually. But, it's always the banks that a lot of them didn't see 4,500 coming this year. And, now they're just chasing the targets. It would be nice to see put out an estimate in January, in late December, early January, and say, hey, here's our estimate for the year. And they don't change it. It's now every other day you have estimates flying high. Every time S&P goes up, they're just chasing the price targets.
100%. Well, Nick, so, I know we also have to talk about, sorry, I forgot what else was on your list. We have, Boeing. Boeing was the other stock we were supposed to talk about. What was the headline there?
Over the weekend, they were at the Paris convention show. And so late over the weekend, they say Boeing is boosting their 20-year outlook for planes due to narrow body demand. They expect airlines will need to buy 42,595 jets from now until 2042, up from 41,170 planes in its previous 20-year forecast last year. The latest projection, it was released on Sunday ahead of the Paris Air Show, is still lower than the 43,610 new jets that were predicted as part of the market outlook in 2021 when Russia aircraft demand was factored in. Reuters has a number of headlines and stories on its page. Probably guessing Benzinga Pro does too. But Reuters has reporters at the Paris Air Show, and so they had a number of headlines regarding India, whoever was buying these airplanes. The list just goes on and on. But the Paris Air Show is always a great time to get out, look to see what the major airlines are doing, to see how many planes are going to be bought. But it's very interesting that Boeing shares are lower today by about 4.5%, I think. So, we can't make too much into it, but travel is back. I don't even think travel was dead because TSA, Carl Quintanilla tweeted this out earlier before he went on air, that the TSA screened highest number of air passengers in a single day since 2019. So travel is back. A lot of them are going to have to, hopefully these airlines are going to have to fulfill these positions, the pilots, the people that help you get on the plane, just because travel is not going away anytime soon, especially it's summertime. So we're going to have to really look into the travel numbers, see how the airlines do for whenever they report Q2, Q1 earnings, and see their outlook into the year. I mean, I pointed out on Twitter the other day that normally whenever air travel is up, you get the unruly passengers, the ones that misbehave. So we're going to have to really see how they're going to be dealing with that, the unruly passengers, how we're going to have to be dealing with people flying daily. So these airline stocks, travel stocks, are going to be a close watch.
Yeah, 100%. Going through some of the airlines here. Here's Southwest's chart. You can see been trading up. Actually, I mean, Southwest stock been super strong since about a month ago. Went from $28 to $34. Looking at the chart here, I mean, December, this is right around when Southwest had to cancel all those flights around holiday time. And you can see the stock dip down to around $32. Moved a lot lower than that. Got down to below 30, $28, and has come up from there. But it's interesting to see that Southwest stock right now, where it's at right now, is kind of right where it was at, right, again, near that holiday fiasco when the company had to cancel all those flights. So just interesting to see that the stock has kind of made that round trip, dipped further than there, now back there. Looking at the Jets ETF, which tracks basically all the major U.S. airlines and manufacturers and other companies involved in the aerospace. Also been trading higher the past few months. I think, like you said, Nick, travel's just been hot. TSA, numbers, people are still getting out, buying flights, doing their thing. Boeing, though, down more than 3%, as you mentioned. This chart is just so fascinating to me because, okay, you had the big COVID crash, right? That obviously makes sense. And it coincided with, I want to say, like a big crash or problem that the Boeings were having around this time. Like, I think like both basically happened in the same month for Boeing. And out of all the stocks that dipped during the COVID crash, some of it didn't really make that much sense, right? When you look at like Amazon's chart, how Amazon went down, it's funny because you're like, okay, well, it should have been obvious in hindsight that people were going to be stuck home and ordering things off Amazon. That stock should have never gone down in the first place. Or like, oh, everything's going to be moving more online. That's going to be great for AWS. That stock shouldn't have dipped down in the first place. Boeing, it makes sense because people were obviously not going to be flying as much, which brings the demand lower for planes, and people didn't know what it was going to look like. And then it could, you could also argue it shifts the whole outlook for business travel because now instead of me flying to New York for a meeting, we're just going to take a Zoom call. I understand that. But either way, the fact that this, the stock got all the way back up to about 300, came back down to almost its COVID lows, about 115, right? This was last summer when, again, we were all worried about a recession and whatnot, not as worried about a recession. And now the stock's doubled from there, but it looks like it's starting to run out of steam. I mean, it seems like, to me, Nick, that investors just don't have a lot of confidence in Boeing right here, right now.
No, it's going to be very interesting to see if the confidence levels from the Paris Air Show. I don't think, because it was a long holiday weekend, we're just getting back into the office, getting back into looking at the headlines. It may take a little while to see if the investors and traders do look into the Boeing Paris show, into the airspace show, to see what did Boeing say. Is it a healthy outlook? It's going to be very interesting to hear when they report earnings, if they reiterate that guidance they gave at the air show, or are they going to give some new guidance to surprise people? We know the market doesn't like surprises, but CEOs do like to surprise traders and investors and people who are on the conference calls and earnings reports to hear what they have to say.
Yeah, and I mean, it's Boeing. I wouldn't put too much emphasis on its price action today. I mean, the overall market is trading lower, and Boeing does trade kind of with the Dow a lot of the times. You look at what's going on. I mean, the China demand and everything. So again, I wouldn't take too much of it just from today's price action, but it is interesting to see. Let's see what else we got going on in the chat. Going
I was going
down.
to say, we could take a look at Kava. It would be Kava because of that IPO to see where it's priced. Goldman out with another new note on IPOs. Quote, our baseline forecasts point to a further improvement in the IPO environment in second half of 23. The improving macro backdrop has not translated into IPO activity. It's very interesting that Kava is at 38.45. If I remember correctly, Aaron, quote, and let me know if I'm wrong, but if in about 12 months from where Kava was, it was what, 40, 44, 46, 47 area. In 12 months from now, it will be lower. If I heard that correctly from other people citing other, economists, that if an IPO soars on the first day at 48, 12 months from lower, it's typically lower from where it was when it opened.
Yeah, I think, just on in regards to the IPO environment improving, I think the seeing that Kava IPO, I mean, there hasn't been a lot of super fiery IPOs since the market kind of started moving down when I don't even know. Let me check this real quick on the SPY chart. What do we call when the market crashed? I guess, did it crash? We entered a bear market. When the bear market started in about January 2022, you really saw basically no big high profile IPOs. And it was a big contrast to a year prior when we were getting a bunch of IPOs, Coinbase, you had all these different SPACs, and it was Rivian, these different IPOs that would just run. And then we didn't see a single one for 18 months. Then you finally had Kava come out, and you didn't see Kava. I mean, Kava, what did it do? It doubled and then came back down to, what did it get up to? Got to a high of,
I think, 48, 47 something?
Yeah, and the IPO was priced at 26 or something before it came out. So I think it almost doubled from its initial IPO price and then came back down below 40. Trading at 38.25 right now, but it's fun, Nick, to get some more to get some IPOs back in the mix.
Well, I was gonna say this list, Deal Room. This is by Kisan Patel. I was looking at the highly anticipated IPOs in 23 this year. We're still waiting for Mobileye, Stripe, VinFast, Databricks, Reddit, Discord, Instacart, TikTok, Chime, Fanatics. I mean, there's just so many that the list just goes on and on that we're waiting for. And then whenever you do list, you have to say, where do I want to list? The New York Stock Exchange or the NASDAQ? When should we go public? Do we have enough money to go public? There's just a lot of these looming questions that are questioning. When is the right time to go public? Are we still going to be able to be fundamental? Are we still going to be able to price this? What's the price going to look like? Are we going to slump on the first day? Are we going to rise like Kava did on the first day? It's going to be very interesting to see how IPOs do shape up into this year, halfway through this year, into late into 23 and early 24.
Yeah, let me just Google 2023 IPOs and see what else we've got on the docket for this year. Let's try this one. Upcoming IPOs to watch. All right, Instacart. Ooh, okay. Chime Financial. I'm not super familiar with them. ARM. What is ARM? Stripe and then Reddit. Okay. Wait, I know. What is ARM? Is it the computer
Yes, that's a computer processors.
Okay. I think someone was they're a chip. Okay, chip design ARM. Okay, yeah, that's right. I know ARM. Okay, so ARM, you got ARM, Reddit, Chime, whatever that is, coming up still in 2023 or scheduled. So we should have some other ones. I don't know if there's any SPACs still going on, Nick. I haven't heard much about any SPACs recently.
I have not either. Aaron, believe it or not, when I said Reddit, the Journal just dropped a piece. The Wall Street Journal just dropped a piece within the last 15 to 20 minutes that says Reddit hackers threaten to leak stolen data if company doesn't pay $4.5 million abandon fees. Going to try and read more into this quickly, but there's some confidential information. We know that Reddit had an outage last week, and people were very mad about it. They were trying to accumulate it here over to Twitter, but we have that Wall Street Bets group on Reddit that's highly fundamental, that does a lot of these short selling, short buying stocks. And so this is very interesting that the Journal has this piece, and as I'm trying to log in here, are we going to be able to see IPOs in this type of market? I mean, if we see S&P going down to 4,000 this year, I guess it's not a good time to price your IPO on any stock market exchange. Or is it going to be, we have to be in a good bull market and then you have to price right exactly? Because if you miss the day, if you miss a day or two, that no, we should have priced a month earlier, but if you price a month later, then you're really going to be in deep water.
100%. Another, so Reddit is probably going to be the biggest IPO of the year in terms. I mean, it's that one. I don't know, like, how you don't just buy it and in like on the IPO date, just in the off chance it skyrockets, because it's going to be such like a meme. It's going to be probably the biggest meme stock of all time. It's Reddit's where all the meme stocks started. Like you said, Wall Street Bets. Like, if you don't think Wall Street Bets is going to go out there and try to run, Reddit once it IPOs, you're crazy. So that will be one that, might just be worth YOLO purchase a share just to see what it does on the IPO date. But it wasn't the biggest in terms of market cap. We just had that list up. I think that said Instacart or ARM had a $50 billion market cap. I mean, ARM, I would expect ARM to start trading really hot too, because you've had such, positive trading action in all of the AI chip makers, NVIDIA, AMD. I mean, this has been driving everything. So, I would anticipate some people buying ARM because of that, and there being, again, the stock going up when that company IPOs. So we'll keep an eye out on these IPOs. I should reach back out to my man Matt Hammond, the IPO warrior. I don't think we've had him on the show in a while, so he'll have to come on and we'll talk about some of these things. Nick, another one of the biggest stories, not really market related, but just biggest headline I've seen today. It seems to be getting a lot of, there's actually a lot of big headlines today outside of the market world. One of those being this Titanic submarine that has gone missing. Have you been following this story?
So I have the news on yesterday, and it's very interesting. I didn't catch a lot of the story, but it's just like this missing submarine. And so, they're still trying to they're trying to find this. New York Times has a live updated feed, and the last update was at 12:03. They're still racing against time to find this submarine. They know that the Titan had been in the area to explore the wreck of the Titanic when it lost contact on Sunday morning. At that time, 22 feet long vessel was more than halfway into what it should have been 2.5 hour drive. It's only equipped with a few days worth of oxygen, so they are running out of time. But it's just very interesting that this story has just been popping up, and it has been getting views on social media. Even if the Titan can be located in a remote patch of ocean where the seafloor lies more than 2 miles below the choppy surface, retrieving it will not be easy. This is partly because even the best divers cannot safely go more than a few hundred feet below the surface. So it's all this depending on where this Titan is, where this submarine went. Who are they going to be able to get down there? They're going to have to get some professionals down there just because they don't know what's down there. Oxygen is running out very quickly. And so it's going to be very interesting to see how far this thing's traveled down and where they're going to find it at.
Yeah, I mean, it's obviously a scary, like, sad story. We hope everyone's gonna okay if possible, but just one of those stories that it's shows just kind of how like scary. Like, I don't know. I thought about this when people were paying to go up in Bezos's space thing, the Blue Origin thing. I was like, I just don't know. Like, for me, like, that risk just would not be worth it for me to do, especially when you factor in like the huge amounts of money it costs to go on these excursions. I think they were saying like each person paid $250,000 to go on the submarine or something along those lines. So, for me, if I'm ever propositioned on one of these, go to space, go to the bottom of the ocean, pay all this money, you'll see these cool things. I think I'm out on it. I just do not want any part. I'd rather spend that money, traveling with my family, whatever it is. So, again, we'll be monitoring this story for sure here on benzinga.com as well if you want updates. Again, no real market implications there. It's just been kind of one of the biggest stories. If you turn on CNN, Fox News, wherever you get your news, people are talking about it today. So one of those, and people love just a storyline. So the fact that it's Titanic and it was already this one tragic shipwreck, and then now you have this submarine that potentially is lost going to look at the Titanic. It adds this layer of irony and interest, I think, for people.
Yeah, if you could pan to Amazon shares, I don't know. I think last I checked, they were higher. The Washington Post, Aaron, has a story out this morning that Senator Bernie Sanders has launched an investigation into Amazon labor practices and what he's just detailing into the warehouse. And once I pull the story up, I can give you a bit more details as I was going through this. But they've always been Bernie has always been trying to target them, and so his probe into Amazon is the latest in a series he has launched since becoming chair of the Senate Help Committee (HELP) in January. And so, what he's in a letter to what he calls to Amazon chief executive Andy Jassy, he says that, quote, systematically underreported injury rates Amazon has, and so turnover, productivity targets, and adherence to federal and state safety recommendations. He has often castigated Amazon in fervent speeches on income inequality and corporate greed in America. In an interview with the Washington Post, Sanders does say, quote, Amazon sets an example for the rest of the country. What Amazon does, their attitude, their lack of respect for workers permeates the American corporate world. Amazon founder Jeff Bezos owns the Post. Interim Post chief executive Patty Stonifer sits on Amazon's board. There's still no comment from Jassy as I look at this, but an investigation into workplace health and safety practices at Amazon, the e-commerce giant, has drawn attention for opposing union organizing efforts and for injury rates roughly double the industry average. Steve Kelly, a spokesperson for Amazon, responded that the company had, quote, received Chairman Sanders' letter this evening and are in the early stages of reviewing it. He noted that Amazon had an open invitation for Sanders to tour one of Amazon's warehouses. So it's going to be very interesting. To give you a bit more background of the Help Committee, the Post points out that they have targeted, there was a major target for Starbucks in January. Remember, Sanders did write a similar letter to Starbucks founder and former CEO Howard Schultz, accusing the Sanders, hey, come on out and visit, tour. We'll see how this goes and how far this goes. And we'll see if any, DOJ, any national government does step in.
Yeah, I mean, it's one of those things, Nick, that I think with this story, particularly with Amazon, it's going to be very polarizing because I think you're going to have, Bernie Sanders himself is a very polarizing political figure. You're going to have people come out and probably criticize Bernie for coming out and trying to, regulate Amazon a little bit harder. I think to probably like the most common sense outlook on this is that, yes, there probably are a lot of injuries and whatnot in Amazon's warehouse, but when you look at how big Amazon is and how much volume they do, like that, probably accidents are going to happen. Does Amazon do enough to try to prevent these injuries and make sure workers have like a good working experience, healthy? No, probably not. So there probably are improvements the company needs to make in order to meet like a higher quality for its workers. But does that mean that Amazon's the devil and that, we all have to, boycott it? Like, no, so I think just finding, kind of having that common sense outlook, middle ground, saying like, yeah, there probably are things that Amazon should be improving on in terms of worker care and how they're working. Is it the worst company is it like a company an evil company out of like a movie. No, not really. It's just a really big, So it'll be interesting to see if this gets any traction, because there's been a lot of talk about Amazon needing to improve its conditions for like a long time, and I don't know if it's ever fully happened.
Right, and I encourage everybody to go read the Washington Post. This is the one outlet that broke the news. It is a very detailed reporting of what Sanders wants, what has happened before, what he's accusing Amazon to do, and what they are doing. At the end, it says Sanders has requested that Jassy and Amazon respond by July 5th. So we'll see. They do have some days here to respond, give a formal letter. But I'm not surprised that the Post broke this, just because of Jeff Bezos and everybody who's accumulated with Amazon with the Post. It will be very interesting to see what kind of outcome is from this letter, this complaint. And are they going to have an open debate? Is Sanders going to go to an Amazon facility? Is the CEO going to come on Capitol Hill and somehow testify? I don't know. It's going to be very interesting to see the outcome.
100%. Well, Nick, is there anything else you have on your radar today?
We touched a little bit on Alibaba on Tuesday said its CEO and chairman Daniel Zhang will step down from the roles to focus on its cloud division as the e-commerce giant moves ahead with a plan to split into 6 business units. It is important to note Zhang has been concurrently serving in 3 roles since December, when he took over as the head of cloud unit after it suffered an outage. The CEO will be handed over to Eddie Youngming Wu, chairman of Alibaba's Taobao and Tmall Group, while executive vice chairman Joseph Tai will take over Zhang as chairman. Both appointments will take effective on September 10th. So, it's just reshuffling of CEOs and positions. It's common that does happen, especially if you've been serving as CEO in 3 different divisions in a while. Other than that, it's been a relatively quiet so far short week. Going to watch tomorrow Powell on the Hill. We did get some comments, Aaron, as we were talking, from Fed Waller, I believe. He didn't really say much, Fed Williams. He didn't really say much, just basically sticking to the normal. Improving banking culture is a long game. Important regulators around the world are looking at bank culture, so not too much, but Powell on the Hill tomorrow and Thursday. Gonna watch everything, the norm.
Yeah, I mean, it's kind of like I said at the beginning of the show, Nick. Right now, I feel like the time of the year where things are just a tad slower. That doesn't mean we don't get big headlines. I mean, the Alibaba thing, like you mentioned, the CEO stepping down to focus on the cloud position role. So, if you remember, Baba's stock popped, pretty heavily on the news that the company is looking at breaking up its divisions. And if I had to guess, I'd guess that this cloud computing division is going to be the one that has the most interest as its own entity. But I think right now, ahead of the split, especially when you have this kind of slew of bad news happening at the same time with the company. You have the China outlook worsening. You have the fact that the CEO stepping down. The stock's trading down 5% today. I might be looking at this as a buying opportunity, just in the sense that, okay, I know if I buy the stock here down the road, it's gonna get split, and I'm gonna be able to get in on this, and maybe I'd want to sell 2 out of the 5 of whatever it splits into, but I want to have, equity in that cloud computing one. So I don't know. I'm going to have to look more into it. Like I said earlier in the show about the Chinese situation, just seeing, okay, is the economy really in that bad of a position, or are people overreacting, which is quite frequent when it comes to China. So I don't really have an outlook on this. I'm just, my gut tells me that down the road, especially after this splits 5 ways, that we're going to look back on this and say, like, oh wow, this would have been a great buying opportunity.
Well, I mean, too, we had Secretary of State Anthony Blinken over in China over the weekend, and President Xi hails progress after Blinken talks as U.S. and China attempt to mend the ties. It was a very interesting outcome of what they were trying to accomplish. We do know the war in Ukraine is still going on. And so Russia and Ukraine and China, there's all these parts of who's supporting who's sending, money to which. But it's going to be very interesting to see because President Biden over the weekend in remarks before he boarded Air Force One did say he hopes in the next couple of months that he does have a call with President Xi.
Yeah, I mean, I think that's one of the things looking back, going back like a year ago when all these Chinese names were just getting hammered day in and day out. The U.S.-China relations was one that was, that was one of the reasons. So if Biden and China do have some sort of agreement, some sort of plan in place from an economic standpoint, that these stocks could start moving a lot higher because of that. Let me just catch up on the chat real quick, Nick, see what's going on there. Someone said once they lost comms and ping, it was probably it for the submarine. I hope that's not the case, but you might be correct. Spice. Let's check that out. Easy Mike. It's a space Virgin Galactic Space. Yep. Holy cow, what's going on here? Up 25%.
Latest I can find, I was going to say they're going to launch their first commercial space flight.
It's probably just some sort of like, short squeeze rally or, I mean, this thing has a history of doing this. If you look back at the chart, if you look at the daily chart, you can see, how it's spiked before. And usually when it spikes, something not so great happens and that the stock just gives up all its gains, if not more, which has, been the case virtually every single time this thing has gone up. So I'd be curious there. One stock I've actually been watching a lot recently is Upstart, down 8% today. So Upstart is in this, super growthy category. The stock obviously went bananas during COVID. It had no reason. It had no right trading at, $400 in October 2021. And what Upstart does is it has a technology that basically like approves people for loans and gives people loans, but I think using AI or it does it. I don't know. I've actually used Upstart before. And it's like, I thought it was a super great experience and like I was blown away. And I always felt like the stock on the way down here when all the growth stock, when every single growth stock was just getting hammered, I always felt like it was getting a little bit unfairly grouped in with some other, growthy names like Clover Health or Roku or whatever that like really like don't make money or have good balance sheets. Whereas Upstart actually does have some good financials. I was going through them a few weeks ago and I like didn't pull the trigger on it. And the stocks basically just skyrocketed from $12 to 40 in a few weeks from early May to now. So it's in 6 weeks, the stock's gone up like 300 or 400%. So now I'm scared to buy in, but like looking at the chart, it's still trading really low. So I have no action on this one right now, y'all. I just am, that's on my watch list.
Yeah, I was going to say, pivoting to AI, CNBC has a .com story out about 30 minutes ago that says President Biden to meet with AI experts in San Francisco. He's going to meet AI experts in San Fran today as the U.S. government continues to grapple with how best to regulate the technology. The visit comes as many in Washington are seeking to learn more about AI's risks and benefits for society in an effort to not repeat the mistakes that came with a lack of regulation at the dawn of the social media age. Biden is expected to meet with experts including Center for Humane Technology co-founder and executive director Tristan Harris, Common Sense Media founder and CEO James Steyer, Algorithmic Justin League founder Joy Balmawin, and Khan Academy founder and CEO Sal Khan. It's going to be very interesting to hear what they have to say, how AI is going to be the new language. We have ChatGPT, we have OpenAI. It's very interesting to hear how accurate AI and ChatGPT, all these artificial intelligence areas can be. Is there going to be a limit to what resources they have? How accurate does it have to be to make sure it's on the market working 50, 75, 100%? But no matter what, Goldman says, I think it was Goldman that says 300 million jobs could be taken by AI. Not one person can be taken by AI because AI is always wrong in some sort. So you're always going to have a fact checker on standby.
Yeah, I think the AI, we're gonna see some regulation in this space. It's just a matter of what it looks like, and the space is so new that maybe even some of the people in AI don't know exactly what that regulation should or will look like. But I think that they're doing the right thing by getting all these people kind of together. You had Sam Altman, of course, the CEO of OpenAI. He was basically pleading for more regulation, which you typically don't see that from the people that are running the businesses in any given space, any given industry, where the business leaders themselves are the ones calling for regulation. Usually they want deregulation. So I think that's a telling sign that they're like, this is some pretty serious technology. Like we're going to need some government regulation if we want any, sort of success here. So, it will be worth watching what happens with these talks with Biden and the different AI leaders throughout the space. Let's take a look at some of the AI stocks today that have gone up a bunch on AI news. You have Microsoft, obviously, trading down about 1%. You have Nvidia. What's Nvidia doing? I mean, oh my God, Nvidia's up today. Everything else is down and Nvidia's up. People just can't get enough Nvidia. I mean, Qs are coming back a lot though. When we started the show, Nick, I mean, go to a 10-minute chart here. You can see the rallies in the Qs right now. Looks like it's gaining some legs. We'll see. Maybe even we could turn green by the end of the day.
Yeah, it's going to be very interesting to see. We have FedEx tonight that reports earnings. What that details for FedEx, UPS, NVIDIA, they just keep going up. We're going to have to see how the NASDAQ performs. But if we could pivot, Aaron, another story that I think that's catching attention is Rivian and Tesla. Rivian owners to be able to access Tesla superchargers from 2024 with adapters. Rivian says it will make Tesla-style charging ports standard on its vehicles from 2025, and it will adopt Tesla's charging standard. It goes to show that Tesla is partnering with a lot of these companies, Ford, General Motors, now Rivian. Tesla's going to get some revenue. Like I think $3 billion was in the works. That I think Piper Sandler said that they think Tesla is going to get an additional $3 billion from all these partnerships.
Yeah, I mean Tesla. I don't even know what else to say about Tesla stock other than that you don't want to be short it because. This thing has now more than doubled, on its way to tripling from its lows, January 2023. And I mean, like it seems like nothing can stop this right now. I mean, I personally thought the sentiment on Teslas was like so negative at that time. I remember here in the office building, hearing some guys talking about, and this guy was like, "Yeah, I've had a Tesla for the past 5 years, and I'm selling it. I'm getting a Mercedes." And it wasn't because anything Elon was doing, but he said basically the stuff Elon was doing with Twitter and politically and whatnot didn't help. He was like, yeah, now I'm back on the market. And I'm like, well, I don't have any I don't feel any loyalty to Tesla anymore. So he went out and bought, a different electric vehicle. I thought, like, to be completely honest, I thought when Tesla was on this, move down from 400 down here to 100, it was on its like spiral of death. And I didn't think it was worth going long there, and I've missed out on this whole rally. And so I think there probably are a lot of people that are going to come in here and try to get short Tesla. You can see here the RSI's at above 86, which means it's very overbought in terms of technicals. But as we know with Tesla before, it doesn't seem to matter. I mean, it can run and then keep running and then run even more. And it's especially when people are buying puts and trying to short it and trying to time this drop. So again, like I wouldn't necessarily, me personally, I'm not buying Tesla up here, but I'm sure as hell not getting short because I do not want to get caught in any sort of short squeeze, short rally, anything like that.
Well, there's reports too to add to the Tesla thing is CEO Elon Musk is to call on Prime Minister Modi during U.S. visit. There's a report out this morning from CNBC TV 18 that Musk will be among the leading U.S. CEOs to call on Prime Minister Modi during his state visit to the United States. Musk would be among the first set of CEOs who will call on Prime Minister Modi on Tuesday evening, so tonight, I believe, in New York. Musk had at first met Prime Minister Modi during the latter's visit to Tesla factory in San Jose in 2015. Indian government has held several rounds of meetings with the Tesla management on the possibility of Tesla moving some part of its supply chain to India. To note, it's been very interesting to hear and to see so many different companies expanding. Intel moving to, I think, Warsaw, Poland. All these different chip companies, Micron, that they're moving operations out of China. Apple moving to Vietnam. China is not the center of chips and everything anymore. They're expanding. Warsaw, Poland, India now. It's very interesting to see that we're moving away from China and we're moving to other options.
Yeah, I think it was, the numbers were just absolutely staggering out of this Intel Germany deal. I think it was like Intel's going to be investing $30 billion into German German manufacturing over the next few years or something crazy. Let's see. I'm gonna try to find this story. Intel's 30 billion investment, single largest FDI in German history. Intel scores 10 billion subsidy deal for new plant in Germany. So that's not a bad deal. You spend 30 billion, you get a $10 billion subsidy. It's basically 25% off right there. But all right, Nick, I think we've got through most of the big headlines of the day, unless you got anything else. Might have to just call it here. Ran for about an hour on the dot, and we'll be back with more on Thursday.
I was gonna say it's gonna be a good week to see what Powell says on the Hill. I think that is going to attract some attention just because his views on inflation, coming down to inflation, what they think on the banking regulators, that they don't think a lot of everything is priced in. So we have Powell tomorrow and Thursday. Fed speakers are racking right back up again. So not too much to say, hey, we're going to be in a quiet period. Other than that, that's all I got. We're going to have to continue to see how the S&P 500 holds up, see what kind of calls are being made. Got FedEx tonight, so we'll be watching that. To let everybody know, Jim Cramer is out in Dearborn, Michigan, I believe. CEO Jim Farley is going to be on Mad Money tonight. We'll see what Farley says with General Motors. It's always interesting to compare Ford, General Motors, Tesla, Rivian, all these different manufacturers, all these different companies to see what kind of cars are being made, how they're coming together, how Tesla is going to be with the Chargers. So I'll be tuning in to see what Farley says. We'll bring you the highlights Thursday. Other than that, I don't got anything else.
All right, man. Well, looking forward to chatting with you on Thursday, Nick. As always, thank you for joining on the show today. Y'all smash the like for Mr. Nick Brown. Till then, peace and love. Happy trading. We'll be back on Thursday. Stick around. This stream will redirect you. We've got a cannabis stream starting up at 1 p.m. that you do not want to miss, so do not go anywhere. Again, the stream will redirect you. Peace and love, y'all.
Peace.